Okay, now on to the really fun stuff. How to trade cryptocurrencies. There are a variety of ways to trade cryptocurrencies, and now all the ones that we're going to show you is on a technical basis, because fundamentals really are based upon leveraging on news stories, just riding that flow, which is difficult to predict. But on a day-to-day and week-to-week basis, we have a lot of technical indicators that help us effectively trade cryptocurrencies. This chapter is on short-term cryptocurrency trading, and then the next chapter is on our longer-term strategy, which is the one that has the MT4EA. As usual, before we begin, trading cryptocurrencies, CFDs, Forex all carry a high level of risk and may not be suitable for all investors. If you're trading a leveraged instrument, it can work against you as well as for you, so make sure you consider the risk of trading those instruments before doing so. So on a short-term basis, we think there are three ways to trade cryptocurrencies. 50-100 breakouts, as well as the RSI churn on the daily and 4-hour charts. We'll start with those. Now, we're going to use Bitcoin as the rule of thumb because, honestly, that's the primary instrument to buy or sell, but you could probably do the same with Ethereum as well. I personally would not day trade anything beyond Bitcoin and Ethereum because they have the greatest liquidity and have less in the way of erratic movements, but, of course, that's up to you. So starting off with Bitcoin, I've got a Bitcoin chart here. I'm actually going to try to get it into my little screen. If I can just get everything the way I want it. So now I've got my Bitcoin chart. And what I like to do is, let me see if I can get rid of this here. All right, I'm going to move that down there. I like to use candle charts. Let's get rid of the volume indicator. So the first technique of trading Bitcoin is using the 50 to 100 breakouts. Bitcoin really, and any of these really volatile instruments love to break out of key levels. And I think that we can see that. Let me see if we can get a horizontal line going here. Now, whenever we have a 50 or 500 to 1,000 breakout is more specific on Bitcoin, like we have here, 4,000, 4,500. If we get let me get the horizontal line here, 4,500, 3,500. If we get any type of movement here, whenever you see that we break out of these, like over here when we broke out of the 3,500 level, over here when we broke out the 4,000 level, there tends to be continuation. So what you can do is you can, of course, you want a real breakout, so you need it to break out by at least $100. So you need Bitcoin to go from or maybe 75, to go from 3,500 to 3,575, and that's when you want to buy, targeting 2 times risk with 1 time stop. And you can see that you get a nice little continuation here. Here you also get a nice little continuation. So I said you want to buy 75 above the 500 or 1,000 level. And you want to have at least a 150 target, and then you can trail your stop if you want, and a 75 stop. You can see here when we finally break the 4,500 level, also multiple days continuation. It works to the upside and to the downside, although it works better to the downside. Here we break through this level, and you wait for the candle to close, and then we do have at least 100 continuation, 150 continuation. Here we have really nice continuation. Nothing works 100% of the time, so obviously this one didn't really work out. But then again, the next trade we have here is a really nice continuation, and you have that over here as well, along with the 5,000 breakout over here, and so forth. So basically, recapping how this works is that you want to, buy and sell breakouts. You want the breakouts to be at least $75, with a 75 stop, a 150 first target, and you can trail your stop as you see fit. Another one that I really like is we're going to add in the RSI. see if we can get an indicator going on here. And this is for, I like this for the daily chart as well as the, the daily chart as well as the 4-hour chart. But we'll look at the 4-hour chart because we're looking on a slightly shorter term basis. So we're looking at the 4-hour chart here. What I like about this is I like to trade the RSI quote unquote turns. And I prefer to trade the turns to the upside than to the downside, because these instruments are obviously in a very prolonged downtrend. And so what you want to look for is basically you want to look for deeply oversold, which we actually haven't seen in a while. So here we go, deeply oversold in Bitcoin over here. So it moves into below the 30 mark, which is below the purple shaded area. So you watch it move below the 30 mark. And just because it moves below the 30 mark doesn't mean that you buy. You want to wait for it to roll back up above the 30. So go to about 35. That's when you buy, with the stop at the previous low. So here we would have gone long here. Our stop would have been at the previous low, and target 1 times risk for the first half of the position. And you can see in the long side, if you go short, the shorts don't work as well because there's so much inherent demand in these currencies. The longs work much better, although the 5100 breaks work really well on both the upside and to the downside. Let's see if we can find another example here. Here we go. We go into oversold territory, and then it dips below 30. You wait for a bounce back up, and then that's when you go long, and you can see you have a really nice movement upwards. Here, this one did work to the downside, where if you waited for it to go to overbought, dipped back down, you sold, then you can ride this movement downwards. But if you remember the slide, I said overweight longs, underweight shorts. The longs tend to work much better than the shorts because unless we're in an aggressive downtrend. But because people believe in the future of digital currencies and the long-term perspective of it, they're much more bullish and much more bottom pickers than top pickers. And you can also do this on the daily chart, and we'll take a look at the 1-hour charts for those of you that really like it. But the daily charts, you don't get the overbought, oversold, and certainly you don't get oversold as often. So here's the time when we get an oversold over here, where it dips below 30 and then finally goes upwards. We get an overbought here, and we do get, if you sold over here, because it went into overbought territory, rolled over, if you sold over here, you have a little bit of movement. You've probably been profitable, but not as lucrative as a long. Here you do, if you went to overbought territory above 70, then it dipped back below 70. If you went short over here with the swing high stop, you can see that that one would have worked out well. And then you have a long trade here over here. You can see that would have worked out well as well. So, it does work really well actually on a daily chart on both a long and short basis. Now we're in overbought territory here, but you need to wait. Just because it's overbought does not mean you sell. You want to wait for it to dip back below 70, and that's when you sell on a closing basis. Shorter time frame you go, the less accurate it is, but still overweighting longs here. Here, if you went long over here, you would have had a profitable trade. We'll skip the shorts because the market's inherently bullish. We really don't have too many trades here either. So the 1-hour chart really doesn't give us that much more in the way of trades. Here we have a trade. Let me see if I can zoom in a little bit. Here we have a trade where we go long pretty much when it crosses back above 30. So we go long right over here, and we get a nice little continuation, which is certainly, it's 150, which is certainly within our target level because our stop would have just been at the swing low over here. So you can do this on 1-hour charts or 4-hour charts, but as you can see, 1-hour charts, we don't really, you really just want to go long, but we really don't have as much opportunity on 1-hour charts. So here's some crazy jagged price action, so we can see how we perform here. So here we probably would have been stopped out. You do have some more false signals on the hourly chart than you would do on a 4-hour chart or a daily chart. So that's how you could trade cryptocurrencies on a short-term basis. The bottom line when it comes to trading short-term cryptocurrencies is have a plan, trade the plan, make sure you abide by your stops, like the swing low, swing high stops. Don't even think about valuation, although I would have to say that going long is usually much more fruitful than trying to pick tops because of the fundamental hysteria around cryptocurrencies, how people really believe in the future. And, I think they're not going away. I agree in the future as well. And I think that because of that, when it gets too oversold, you really get a lot of bottom pickers. Let the long trade run. Bank the short trades quickly because usually downtrends don't last for long. And when you do have an uptrend, don't chase the move because your risk reward becomes very poor and it really becomes much more difficult to trade. So hopefully that's giving you some tips on how to trade cryptocurrencies on a short-term basis.